Welcome back to our earnings special, quarter se quarter tak. You're still with us here. We're reviewing and essentially reviewing opinion and getting you previews on what to expect. Nischal, Maheshwari of Edelweiss, Gautam, Duggad of Motilal, Oswal Securities, and Sanjiv, Bhasin of IIFL are with us. Let's actually talk about another sector which is essentially going to report a good set of numbers. Expectations are pretty high. Autos, what can we expect? Let's set it up with Sonia, who's standing by with the preview. Sonia, over to you.
Well, thanks a lot for that. It is expected to be a strong quarter for the auto sector. Stripped of Tata Motors, the auto sector is expected to post a revenue growth of almost about 25-26% Kotak says companies like Ashok Leyland, Maruti, M&M and Balkrishna Industries could lead the way in terms of revenue growth. Although raw material costs were higher this time around, the companies have been able to offset that through price increases, and hence margins have not been impacted by higher material costs. Kotak says Maruti's sales could go up by about 30-odd%. The profits could rise by more than 50%. Hero Motor could see a sales growth of almost 14-odd%, while Ashok Leyland could see a sales growth of almost 51-odd%. So it's only Tata Motors that could disappoint. Stripped of that, it will be a good quarter for the sector.
Okay, well, with that, to our guests, Gautam, to you first. You all have had a great eye for some of the two-wheeler stocks. Motilal Oswal, for 20-25 years has picked up some of these good stocks. But now fully valued, you think, or do you think that in spite of overvaluation, they continue to deliver both gains for stock markets and earnings?
See, Latha, what is happening in the market is quality is getting overpriced, and it's not a new phenomenon. It's been happening for the last 2-3 years. And that's our view, that next 12 months you've had to be in quality plus earnings visibility stories. And that basically means your choice of sector stands reduced to, consumption pack, autos, private banks, financials, and maybe to an extent IT. Rest of the sectors are still struggling in terms of visibility of earnings growth, while there are expectations, but they've failed to deliver. Coming to IT, I think it's one of our preferred sectors right now. And this quarter again, it's going to be a party out there, barring maybe Tata Motors and Hero Honda, because in the base there is a decline of 13-14% for our universe as far as earnings growth is concerned. And this quarter we are expecting 33-34% earnings growth for our universe. Now within that, look at Maruti, M&M, they're all going to have more than 45% earnings growth. Bajaj Auto also, which is a stock which we are incrementally liking more and more, is expected to deliver 32% growth. TVS 33%, Eicher 35%. So I mean, quarter is going to be a big beneficiary. We've already seen the auto monthly numbers. You've seen 15% growth in two-wheelers, roughly 65-67% growth in three-wheelers. UV growth has been 20%, and so has been a growth in CV as well. So across the board, there is a very strong volume momentum. So the fear of commodity price inflation, impacting the margins is being compensated by higher volume growth and therefore a consequent operating leverage. So I think we are very positive on auto even now, notwithstanding the expensive valuations from a near-term perspective.
Sanjiv, but will that fear of a commodity price inflation-led pressure on margins come true? A and B, something like a Tata Motors, which is extremely depressed, and where there is no real expectation as well that they'll be, it's actually the excluded stock, that everything else will do well, maybe except Tata Motors. Could we see something there on Tata Motors?
Yeah, that's actually a paradox, because even though their local CV sales have been very, very strong, the bigger large effect is all about JLR. And from September, the Slovakia unit should be the added kicker. But for now, I think this quarter will also be painful, since they are also unhedged on the pound, and that again has gone into their giving that warning on Brexit and the encumbrances with that. But the rest are going to be outperformers. You've seen Bajaj Auto last quarter also indicate that the subcontinent sales are extremely strong on the export side. The rupee would be, they would be one of the best proxies on a weak rupee. We've seen TVS Motor show a lot of traction on the volume front. Hero MotoCorp again now stands to greatly benefit because of the MSP. So sum of parts, auto is the best, best variable industry which you have, given now that the MSP and the rural effect will also kick in after a very strong monsoon. So we continue to be overweight Maruti, Mahindra, Ashok Leyland, and the dark horses are the two-wheelers. Bajaj Auto, we have upgraded, we've reduced the rating on Eicher because of the competition on Royal Enfield, and Bajaj now gathering more steam. So Bajaj Auto and Hero MotoCorp could be the relative dark horses in the next 6 months.
What a huge bounce on the Ashok Leyland stock. Eye-popping. Two quick questions to you, Nischal. At some point the CV cycle usually peaks off. Is it anywhere near peaking? And secondly, auto ancillaries. A very brief question for a large sector, but what would be the pick?
So I think CV cycle, I think we are in the somewhere close to the mid-cycle actually. And we are yet to see the industrial pickup happening out there. And as we see the industrial pickup happening, basically I think CV should continue to do well in the next coming quarters. Though I think market has been expecting this kind of a peak out happening basically, but we expect that the CV cycle will continue for a few more quarters, and that's why we have Ashok Leyland as one of our top picks out there. Secondly, you said about auto ancillaries. Now, auto ancillaries, I think we prefer the tire sector as far as the auto ancillaries are concerned, because that's where we see that there is a strong demand coming through. Though I think on the within that particular sector, basically, SEAT continues to remain our top pick.
Well, actually, our producer was very helpfully suggesting Motherson Sumi, so I have to ask Gautam, Motherson.
Yeah, I mean, stock has corrected more than 25%. It is part of our top idea list along with Maruti and M&M. We are expecting very strong quarter from Motherson. Incidentally, for this quarter, we are expecting a 27% profit growth. So I would buy Motherson at this price.
Okay, the next sector is a sector where interest has come back, especially in the month of June, and a large amount of interest, although for the quarter, it's not, it doesn't look like very much, it's actually a little higher. Ekta is standing by with what to expect from the pharmaceutical space. Ekta, over to you.
Well, yes, for the pharmaceutical companies, it is expected to be a better quarter in Q1 FY19 as compared to the previous quarters, and that is expected to be led by the domestic business, which is going to recover on account of a low base due to GST-led disruption. So around a 20 to 25% growth is what we can expect on average for the domestic companies, and for the US markets also there is expected to be lesser pricing pressure, hence a year-on-year growth of around 5 to 6% in constant currency, but a possible decline of around 2 to 3% on a sequential basis. Margins should be aided by the rupee depreciation, regulatory concerns, and what the progress would be top of mind in terms of commentary.
Okay, that's pointing out to a very important trend. Until now, it was always US which was calling the shots, as it were. But as Ekta is very importantly pointing out, now it's going to be India-focused growth that might, wag the dog, as it were, the tail that wags the dog, as it were. Sanjiv, Bhasin, what would be your pick? First of all, you think there's a long way for the pharma sector to climb, and what do you like?
Yeah, so I fully agree with what Ekta has summarized. And last quarter we saw three large caps: Lupin, Dr. Reddy, and Cipla. Cipla is a local play, and we think they guided that the local business has been extremely strong. Now that was last quarter. This quarter it may more exemplify because of the base effect. And secondly, like you pointed out, most of the FDA issues being cleared, I would actually expect some of the US business to show traction. There, Dr. Reddy will definitely benefit from, aside from US, the European business and the other, the Russia and the area beyond that. And we think the dark horses are going to be stocks like Aurobindo and Divi's Lab. Divi's Lab will gain mainly on the contract farming, and Aurobindo on the injectable side should see a huge amount of uptick on their margins, which last quarter were slightly below. So for us, the pecking order would be Cipla, Divi's Lab, Aurobindo, and any decline in Sun and Lupin to be a buying opportunity.
Gautam, what would your picks be? Pharma?
Yeah, so Prashant, for the quarter, what is more important to look at is beyond numbers, what is the commentary and what is the guidance as far as new launches are concerned, as far as pricing erosion is concerned, because this quarter is anyways going to be very strong. The base was totally depressed, so we are expecting around 40-45% growth. Incrementally, the news flow has been quite positive, and the halal clearance has buoyed up the sentiment in the sector. For now, we are sticking with the large caps. We like Sun and Lupin, and we will take the call as things go along, because this is a sector which you cannot generalize. Each company has its own set of unique problems. So for the moment, we like Sun and Lupin. We're expecting strong quarter for Sun and very flattish quarter for Lupin.
Okay, we could have gone on, but we are out of time. Gentlemen, thank you very much, but we will request your time yet again next week when we will be analysing stocks like NBFCs, banks, oil and gas, metals, telcos. So lots more to discuss, but here's wishing all of you a great weekend and a great earnings season ahead.